What's going on, YouTube? Today was a pretty flat day in the market. We're still seeing a lot of tension in the market due to the geopolitical news coming from the war between US and Iran. However, we cannot control any of that. So let's just discuss the price levels that are most important to us regarding SPY, QQQ, the Dow Jones, and other stocks and indices. So guys, when you're looking at the SPY chart, particularly on the day chart, you can tell that it's been very frustrating to trade SPY because we've just been stuck within this range. And if we draw out this path, we have just been consolidating within this range, and SPY has not really made an incredibly great decision of where it wants to go. However, recently, you guys are starting to see a lot more weakness from the buyers. In fact, if we even look at our daily SMAs, the black line is the MA20. The pink line is the MA50, the blue line is the MA100, and the green line is the MA200. Currently, we're below the 100, the 20, and the 50, and the estimated moving average, which is the 21 estimated moving average. These are all bearish signals, but you guys can tell anytime that we get down to this 675 to 669 price level area, which has been rejected multiple times in December and in early March, buyers are stepping in to protect this zone. So in my honest opinion, I don't think we can really decide to short the market until we see buyers lose this zone. This strong reaction that we saw from $669 should not be ignored. It's very obvious that buyers want to maintain SPY at a certain level, especially above $670. But if we see more weakness in the coming weeks, we see more geopolitical news start to affect the market, and we see buyers no longer able to protect this zone, I do think we can start to short the market, but that's only if buyers lose this zone. We could very well see a comeback and buyers protect this zone, sellers gain the weakness, and then we go all the way back and make a new all-time high. Like if Trump was to come out tomorrow and say the war is over, they want to negotiate, and everything's done, right? We may see this cause the market to rebound a little bit. So with SPY, we definitely want to see if buyers can maintain the 675 area and the $669 area. If they can't, then we will definitely start to short the market. If they can maintain and sellers start to show weakness, then we can long the market and go all the way back to all-time highs. But we have to let the market come to us before we make a decision. Next indice that we're going to be looking at is QQQ. QQQ has taken more of a beating this year than SPY. That's because technology has seen a major sell-off. While SPY isn't only technology, QQQ is mostly dominated by technology. There's been a big sell-off in technology because a lot of investors do truly believe that there is an AI bubble. I don't truly believe that. They want to see products come out of AI. We just can't keep throwing our money into open AI and not expecting anything from it. That's just the perspective from the investor. So that's why you're starting to see a little bit more weakness in the technology sector. And recently, when you're looking at QQQ, it has been frustrating since February because we have been trading within this range as well, just consolidating between $593 and $616. Again, very hard to make a decision when you're seeing a stock range and not make a decision on whether it wants to break out or break down. And even when we look at the SMAs, right, we're just getting above the 20, but we're still below the 50 and the 100, and we're slightly above the EMA 21, and we have not yet reached the 200-day moving average. So this shows us that buyers are doing whatever it takes to protect $593. If we do see weakness at $593 and buyers are no longer able to protect the zone, then expect QQQ to fall. But because it hasn't fallen and it hasn't been breaking down, we can't make that decision yet. But because it hasn't fully broken down or broken out, we have to be patient. We have to wait for QQQ to finally make a decision from this range, right? A breakout could most definitely happen. I'm not saying it will. So again, the same thing with QQQ. As much as it is frustrating, you just have to wait for the market to come to you before you make a decision. Now let's look at the Dow Jones. In my honest opinion, the Dow Jones has been showing more weakness than SPY and QQQ. Even when you look at our moving averages, we're below the 100, we're below the 50, we're below the 20, and they're all starting to point downwards, right? We're just barely maintaining this $477 area. And when you look at the recent trend, right, let's remove these lines from our chart. We have just been forming lower highs and lower lows. So in my honest opinion, Dow Jones is starting to show its hand before SPY and QQQ. We are already down below this $477 level. The last area that you saw buyers protect was $466, right? So in my honest opinion, if the Dow Jones can break below $466, very bearish momentum for the Dow Jones, and I will definitely be looking to short the Dow Jones, with the next price target being this low right over here, which is $455. And this is a low that we have not revisited since November. So I definitely want to see if the Dow Jones can continue going downwards, right? If we do continue to break, I will short the Dow Jones to this next price target of $456. Okay, since we discussed SPY, QQQ, and the Dow Jones, let's look over some individual stocks that I am interested in, starting with Google. So Google, you guys saw ever since it reached $350, it was trending downwards. In fact, if you guys see the trend, right, we were forming lower lows and lower highs. However, we're starting to break out from this trend, and we did leave behind a fair value gap, right? So what I would want Google to do ever since breaking out from this downwards trend, I don't want it to go below $297. We obviously protected this zone multiple times, right? In December, in February, and just 2 days ago on Monday. So I would like to see maybe Google drop into the daily fair value gap, completely disregard this daily fair value gap, not break down from it, and then we break out from this daily fair value gap to our first price target of $328. However, there is a lot of geopolitical news that is coming out in the market that could affect these trades, so keep an eye on that. The next trade that I am interested in is Tesla. You guys can see Tesla was trending downwards as well for a very long time. We swept this liquidity at $387, and we're starting to break out from this downwards trend. However, today we did finish with a big wick from this candle, which is not something that you want to see. So I do want to see a stronger reaction when we're breaking from this downwards trend. We also did leave this daily volume imbalance in December. So if we do see a strong reaction from this trend line, I don't want to see a wick and then we pull back. I want to see a strong reaction. My first price target would be this daily imbalance that we did leave behind in December so that we can finally address it. Again, this is one of those trades that could be affected by incoming news. So keep an eye on the geopolitical news or the news surrounding Tesla that could affect this trade. Another stock that I am interested in is Intel. Again, you're seeing another break of structure. We previously had a downwards trend ever since we reached the all-time high recently of $54, right? But we're starting to break out from this trend. So once again, we did leave behind a daily fair value gap. So I want to see us pull back slightly, reject breaking down from this daily fair value gap, and then we can aim for the all-time high of $55. This is another trade that I am looking at, but again, pay attention to the news surrounding Intel and the geopolitical news that is surrounding the market. This could bring the market down and affect these trades, but these are some of the trades and stocks that I'm also looking at in the market. If you guys like the content, make sure to follow the free Discord in the bio. See you in the next video.